Today, I have a very special guest with me, Emil Kalinowski. He is the co-host of Making Sense of the Eurodollar University, and of course, with the one and only Jeff Snyder. Thank you so much, Emil, for coming on the show.
Max, it's my pleasure. Thank you for inviting me. I really appreciate it.
Of course. To start off, Emil, I'd love for you to, talk about your background, your journey,
Hmm.
how you got into the business and finance and, the minings and metals business as well. How did you come up with the show with Jeff Snyder?
Well, when you said the word journey, the thing I thought of was that Seinfeld episode. Did you ever watch Seinfeld by any chance?
Of course.
Okay, you remember Rochelle, the strange and erotic journey of a young girl from Milan to Minsk. Do you remember that?
I think so, yeah.
I don't know, for whatever reason, when you say journey, that's what I thought of. I wish my story was as interesting. I wish I could say, Emil Kalinowski, the strange and erotic journey of an economist from micro to macro, but it's nothing at all exciting like that. I just went to school. I read outside of like my field of interest, history. I loved history, and then I just had random jobs in finance. Nothing's very specific, nothing very exciting. I didn't go to a fantastic school at all. I didn't get a job where they wear those shoes with the white tips. You know what I mean? I didn't get a job there at all. And I just sort of stumbled forward. And I suppose the joke here is that I slept my way to the top, but I should have thought of that beforehand. But I just sort of I just had normal jobs, regular jobs. And eventually what happened is I landed a great job where I could do the things that I enjoyed, which is writing, reading, researching, learning. Unbelievable. It was interesting. I got that job right after having my worst job ever, which was a nightmare. I hated it. It was at one moment at that job, there was like this red mist that descended across my eyes. There was this one moment where I thought I would kill someone because it was just, they treated you like a child. I couldn't believe it. And then just a few months later, I had the world's best job. I couldn't believe it. Good happenstance. I wish I could tell you this is how you do it. I don't know how it happened. Just studying, reading, maybe pursuing the CFA designation. That's a good way to start. Yes, I pursued that, and that may have opened some doors, plus the jokes, reasonable jokes. And I got a great job, which led me to a lot of reading. We live in interesting times, and that's how I stumbled across Jeff's work. And the first time I read it, I thought to myself, yeah, I don't understand what he's saying. And I didn't read very far. And the second time, that was the same. And the third time, same thing. But then in 2015, I read an article about Alibaba, the Chinese internet company, and it chilled me to the bone because it didn't make sense why it was just waved through without further regulatory scrutiny. And therefore, I said, you know what, something's wrong. I need to learn what's going on out there. And I happened to stumble across Jeff's article again, not about Alibaba at all. But I said, you know what, I know there's something important here, and I'm going to read it for a month straight, even if I don't understand what's going on. Because he writes 2 articles a day, basically. So that was, how many? 20, 80 articles. I figured, okay, maybe not 80, 60, 30 to 60 articles in a month. And I figured, I'm going to give it a shot. I did. I felt like I understood. I felt like he knew what he was talking about. And I reached out to him to invite him to speak at a conference here at the Cayman Islands. And he accepted, and we struck up a friendship after that. And then one day I said, hey, if you ever need an intern to just help you with what you're doing, let me know. And he said, well, all right, I'm working on this paper, yada, yada, yada. We're doing a YouTube show.
That's fascinating. How relationships really do spark.
Yes, mother was right. It's not about the school and what you learn so much as who you meet. But I don't know, it's a mix of both, right? And it depends on the time and the circumstance. It seems like it's so much just good fortune and good luck. Uh, no. But here we are. And so now we're doing a show on a regular basis, and I'm loving it, and people seem to be enjoying it.
Absolutely. I, for one, followed the show quite religiously. So, quite a lot of content you put out on a weekly basis. I mean, yeah, and I want to dig more into the show in case, in fact, some viewers may not have
Oh,
viewed the
yeah.
show.
Quick
Uh,
question for you. Which version of the show do you consume? Because there's a podcast and then there's the YouTube show. Which one do you
I always watch,
follow?
I always watch the YouTube. I'm
Cool.
That's just me. I'm very visual. It's just the best platform for me. I'm sure a lot of other people are like that. I don't know specifically with your platform streams, but
It's definitely much larger audiences on YouTube. The only reason I bring it up is because I add a little bit of extra stuff to the podcast. I do introductions that are thematic and quirky and ridiculous and funny and poignant. It depends on the show. And so that's a little bit of extra bonus for people that listen to the podcast. There's some more there. Oh, and of course, our sponsor, Eurodollar Enterprises, has commercials on the podcast, which whereas they're not on YouTube. So there you go. I don't blame people for watching the show because that's where we do charts and everything. But if you wanted some extra stuff, that's where some goodies are.
absolutely. And of course, for the viewers, we'll have the links to all that in the description so they could, click it as easy as a button. Um, so, and going off that show as well, I'd love to discuss, I feel like probably the primary thing that you and Jeff are tackling week by week is, getting down to, arguably the most unknown market system in the world, the funding market, the Eurodollar system. So you guys do a great job, probably definitely the best job I've ever seen. I mean, nobody covers the nitty-gritty details like you and Jeff. So it's extremely admirable. And with that being said, what aspect of the economy do you see most worrisome? Whether it's a 10-year time frame, a generational kind of shift, whatever it may be. What do you see as top of the line, most worrisome for the global economy?
I suppose the worst would be just spending more time in this depression. I'm operating under the idea that what we're going through is perfectly normal, perfectly natural, not in the human lifetime, I suppose, right? It doesn't happen regularly in a human occurrence, human lifetime, but it's normal in the course of events that this sort of moment in economic history happens. And the good news is that it ends. But I suppose the worst would be for it just to continue and to continue. And it's so troubling to think that 20 years has to pass before some sort of breakthrough might occur, maybe even longer, maybe 30 years. That would be, so that's what I'm most concerned about, is that we continue on as we are presently, where we continue to treat the current economic, social circumstances that we're in as slightly broken, that need to be tinkered with, as opposed to requiring wholesale, transformative, visionary change, radical new world order that we need to enter. I say this as if I'm looking forward to it. I'm not. I'm sure it's going to be unpleasant, and there's going to be parts that I certainly don't like. And I wish I will look back wistfully on the past and say, oh, it used to be like this. But the world order that we exist in no longer works for a majority of people now, I think, a growing majority. And the problem is that we continue to pretend that we can go back to the way it was before 2008, before 2000, before President Trump. If people don't like him and they think, well, maybe all this trouble is because he was such a bull in a china shop. And now we have a nice, calm person in the presidency. But I don't think it comes down to any one person. I think it's just the institutions that are in place right now that were put in after the Second World War, or perhaps after the end of Bretton Woods. They don't work anymore, not just in the United States, but in Europe and South America and most of the world, I would imagine. And so that would be the worst case scenario kind of globally. But I suppose the other awful, just awful, awful thing is the unemployment, the people that are worried they're not going to be able to keep their jobs, even if they have a job, or if they feel somewhat confident with their job, that the wages, the increases to their wages, just modest. And it's just this sad stagnation and near poverty, even though it seems like we have everything that we need and we're one of the richest countries in the world in the United States. But it's just so much sadder and slower and worse than when I was younger and that I remembered. And I think people remember that, and it feels like they're missing something in their life. And so that's what troubles me the most, I suppose. But I shouldn't keep prattling on. What do you think?
I think central banks, foreign governments, sovereign governments in general, they're putting gas out. I mean, they're putting fire out with more gas. It's kind of as though it's a cycle of insanity, quite literally. If you check the definition of insanity, for those that haven't checked it, it's that kind of sequence that central banks and governments have been performing for quite some time, just very much on a persistent basis. And so I think nothing is really going to stop them from here on out. I don't see anything that's going to transition them to quote unquote normalize things for the
I think
greater
it's the
good.
politics that has to change. I thought for a while it would be the economics, because it's so lousy that would cause a change, but it didn't. Um, Over and over, right? The economy has been bad in 2008. It was bad in 2011 and 12 in Europe. And then 2015, 16, the United States and Asia, still no change. They still keep doing the same thing, but bigger and more. They'll just do it louder. And now here we go again. And I'm worried that they're just going to say, well, it was a virus and it was not bad before, and we'll just go back to the way it was. But the way it was awful. And so that's, yes, like you said, it's the insanity. I guess the naive interpretation would be that they don't know what they're doing. They're dumb. The other interpretation, this more cynical one, would be that they are happy with the way things are. They have their big slice, and they don't care about being leaders of a nation, of a people, and helping everyone move forward. So that would be the cynical, unfortunate view, but not unreasonable, I think.
Yes, unfortunately, indeed. And I'm curious, it pops into my mind, when you conduct research, how do you, what's your analytical framework? Whether it's gathering data or whatever it is.
It's not very fancy, I suppose. It's just going to some sites that have economic data that's being reported, like Trading Economics. I really like their site. And they're reporting data from all around the world, historical data. You can download it. And then you can see in the important countries and not important countries what might be happening in any particular week. And if there's anything interesting, uh, I then just kind of write about it. But the framework that I reference is the idea that there's not enough money in the world. There's not enough credit, not enough lending, not enough risk appetite for the real economy. And then I try to weave in entertaining stories about science fiction, zombies, literature, whatever I can think of to try to make this dreadfully boring economic data somewhat lively. And then also some farce and satire, I suppose. That's what I'm trying to make it palatable, appetizing in some way. But yeah, that's about it. That's about it. How about you? What do other of your guests say when they say analytical framework? What are they saying? Are they going to maybe to Fred and downloading that data, or looking just at central bank data, collected data? What do they do?
I remember specifically asking David Hunter, a very contrarian global macro investor. He was saying, it's for him, it's primarily all psychological.
Mm.
He doesn't so much look at data as much as he, looks at his own conviction. He just has so many years of experience, he says, and, it's enabled him to, just formulate things in a more fluent way. Just, I'm not too sure how to explain it. I don't want to come out with the wrong words from his mouth, but it's pretty much all psychological for him. Of course, he looks at, macro indicators as much as anybody else, and other reports. And then you got somebody like Stephen Van Meter, who is very, very solely focused on data-driven aspects of the economy, and he does it on a very kind of daily basis. I mean, he
Awesome.
really goes in the nitty-gritties, so it's really cool.
You know what? Now that you were mentioning all those names, I realized that perhaps that's what I really lean on, is being able to identify people who know what they're doing and who have been writing for a long time and have a framework of their own that they've developed, an analytical framework perhaps, and being able to recognize, yes, these men and women, they know what they're talking about, and it's internally consistent, it's logical, and it confirms what other people are saying that I think highly of. One example like that would be Jeff Snyder, Daniel Want in Australia. Who else can I think of? Keith McCullough, he's more well known perhaps. Michael Pettis in out of China. George Friedman as a geopolitical analyst. And so they've been doing it. You know what they have in common? Historians. And I think that might be it. They've seen this before, and they can reference that idea where they've seen it before and then present it. And they do such a great job. It's so impressive that that helps me understand, the data that I'm looking at. I'm leaning on them, on the, geniuses who know what they're doing. And so that's perhaps my best analytical framework, is finding those few individuals that I feel I can count on.
Yeah, that's fantastic. And I feel as though there's a common line between, everybody that searches for yields, let's call it, or in other words, is searching for, more dollars than they put in the day after. So I feel like, though, that there's a common ground between all of these people, and that is their primary motive is, or incentive is, to capitalize off of whatever it is they want to capitalize off of. But the problem is, in a debt-based, artificially low interest rate environment, it's I guess you could say artificially set up or posed for speculators to digest these investments in any way they want. In other words, I feel like at least in today's environment, as of really since after '08, or really since after '01, after Greenspan, and I'd love for you to add on to, why, the fact as to why, obviously, just because COVID is the thing that pricked a massively accumulated debt bubble for many, many decades. So I'd love for you to explain that, prior sickness to the economy. People always think that COVID is what sparked this bad economy, but it was, like you pointed out earlier, much, much before that. But people's incentives has been, obviously, we've seen a huge growth to value rotation recently, and it's just getting quicker and quicker, these rotations, both in independent securities and throughout different sectors. Just things are so overwhelmingly rapid in terms of money flows. So how do we make of this, and as the common speculator, and is it safe to be in cash, or in hedges like base metals or industrial metals or emerging market equities? What's the answer here? Or is there an answer?
You let me know, Max. You let me know when you find out what it is, because I don't know what the answer is. I think the answer is to, that's a good question. I thought the answer was to spread yourself in many directions and hope that some pieces survive and make it to the other side, to the new order, to the new social contract. But recently, I was listening to Russell Napier, another economic historian, and he made the point that the last time something like this happened, after the Second World War, the key to success during a period of financial repression, which lasted a few decades, was not wide disbursement of assets, but heavy concentration, putting your eggs in a few baskets and hoping they can make it through relatively unscathed. So I think that might be a possibility as well. When it comes to stocks and investments and that sort of thing, my aptitude does not lie in that area. I recommend Keith McCullough and the Hedgeye team if you're interested in trading and name specific investments. I've been following him for several years now, and they've been nailing the inflections up and down, moving in and out of stocks and asset classes for years that I've been watching them. They've been doing it successfully. So to all your viewers, check that out. What would the answer be? The answer would be, what is the answer? The answer, I'm not sure, but let's see. You asked earlier about that this has been taking place for a longer period of time than just the corona. And I suppose I skipped right over that earlier. And yes, the thesis that Jeff and I have is that there's not enough money in the world, and that started in 2008. And this is not unusual when you look back over long spans of history. I remember reading a book by Michael Pettis, who I mentioned earlier, and he looked at globalizations since 1800. And what brought them about each time was a surplus of money that just was created in advanced economy money centers. And that surplus of money then flooded the world. But, like the tides on our world, they flood and they ebb. And so when they retracted back to those money centers, that's when we saw depressions, economic disorder, and emerging markets. And we thought that we had escaped that because our central bankers were so talented, so well trained, so handsome, so smart, so glib. And they called it the Great Moderation, where during the 90s and early 2000s, nothing was going wrong. Everything was going well. And that's where Jeff comes in and he says, yeah, because the private banking system was creating credit and it was flooding the global economy. And so whatever frictions and rocks lay underneath the water that you would trip over, the white water that would be there, it was all smoothed over because there was such a flood of liquidity, because you would make money no matter pretty much what. Over time, you could make money. Everything was growing. But then in 2007, it all came to an end when just happened to be one particular trigger. One particular French bank said, we can't value 3 of these funds anymore. And you could just see it in many of the measures that Jeff tracks, like offshore interest rates and holdings of treasury securities by primary dealer banks. You could just see it, that from that day in early August, the economic system began to disintegrate, and banks, those that create money, stopped doing so. And if your audience is watching this right now and they wanted to see graphs of this, I'm going to look up what episode number this was that we just looked at this in our episode. It was episode 56, ladies and gentlemen, episode 56 of Making Sense. We went through some graphs that will just blow your hat right off. It's unbelievable. It shows money creation up until 2008 and then just a cliff. And that's what's missing. We used to be growing like this, and now it's gone. And now the central banks have come in. They've created a kind of money. It's not very useful, and it doesn't come anywhere close to the amount of money, credit, growth that the global economy had come to depend on for decades before 2008. And central bankers can't fill that gap. And no matter what their efforts are, and it's not just in the United States or Europe or Britain, but in Japan as well. And they've been at it for longer than most anyone. And we're stuck.
Yeah, it looks like the trend we're headed towards that we're in right now is where, the amount of treasury issuances, the amount of treasuries outstanding is just tremendous, and even more to come. While the
Yes.
demand
So
yeah.
I'm sorry for interrupting, but I
No,
feel like I've got something to say, and I should grab that opportunity lest you ask me something where I don't know what to say, and then I'll be in trouble. So let me just say that, yes, there's so much treasury issuance. It seems outrageous. It seems vulgar. But here's the idea. Here's the thesis. The US Treasuries are the most secure form of financial collateral. I'm going to put gold outside of the financial system, but I would say that's more secure. So the US Treasury security is the most secure financial instrument. In a world where risk is modest and return is great, and where everyone's been making money, you don't need US Treasury securities. Why? They don't pay you anything. They're risk-free. Who's interested in risk-free? But in this world, the one that exists since 2008, you need more US Treasury securities than are available. So yes, even though the United States government is vulgar in its deficit spending for the financial system, that there's not enough of these things. There's not enough collateral to backstop investments and balance sheets of financial institutions. So despite the fact that they're just printing them as if they're going out of style, there's not enough of them. And that's what Jeff's thesis is, that we're in kind of a moment again where the mainstream is saying too many treasuries, deficit spending, beware, you're going to burn the currency. But he's saying, no, the financial system is desperate for safety. And these are safe instruments, and there's not enough of them.
not enough indeed. The collateral is shrinking, but the collateral at the same time is just becoming, cycled out through, pledged out through more and more complex. I don't even know how to put my mind about it sometimes. It's so complex.
Me neither. Me neither. It's hard to believe, but it's really just confidence and promises. And because it's worked for so long, that's why it works. But for whatever reason, this complex system sometimes gets perturbed. There's an imbalance in the force, a glitch in the matrix, and people get tight and nervous. Maybe it happens all of a sudden, but usually you can see it coming. People just get a little bit antsier. They're not confident with their counterparties. And so they start holding back the confidence, trust they have in other financial intermediaries and participants, economic actors. They start holding back. And then we come across some sort of trigger, tripwire, and then a panic ensues. And that's what we've seen since 2008, 4 times, global or regional panics that have economic consequences, because who cares about the banks? Psh, whatever, the bankers, whatever, too bad for them. But it spills over into our economy and recently into our politics and our society. So that's the real problem.
Yeah, absolutely. Emil, I wish we could keep going here. I could ask you infinitely more questions.
I'm
But
sorry, I kept jabbering on.
no, of
You should
course
have
not.
waved at me. Oh my God.
It's totally okay. Time's cut off here, so I think it's
Okay.
appropriate to, for you to tell the viewers, if you'd like, what information do you have? What places can our viewers go to see your work? Your Twitter, the show, of course, the podcast. Of course, like I said earlier, all that info will be down in the description, so viewers will be able to easily access it.
Well, ladies and gentlemen, I want to thank Max for having me on the show. He will have all the information down below. He's a great host, obviously. He may not know, he may not put, and this is the most important line, that if you're in the Cayman Islands, I'm at the bar by the rum. Please, you'll find me there. So that's how you can reach me the best way. Otherwise, if you're not there, Twitter, at Emil Kalinowski, and also on YouTube. Just search my name. I have a channel, and I can't think of any other places that you can find me. That'll be about it. But yes, and Making Sense is the name of the podcast. So search for that in your podcast provider. And the most recent podcast, episode 56, has an introduction that's space themed. It's not the worst thing in the world, I was told.
Sounds good. I'm looking forward to it myself.
Thanks, Max. I really appreciate it.
Emil Kalinowski, thank you so much.